Hey, Walter here. I want to talk about an idea that can help you quite a bit in your trading if you're looking to achieve either really high reward risk ratio trades or if you're trying to improve a win rate. Now, typically, when you think about it, if the let's say that you think that the market's going to go down. If you think the market's going to go down, then you could wait for the market to tell you what's going on before you actually go ahead and take the trade. Now, this is contrary to what most traders do. In fact, when I first started trading, I was really keen to get in on a trade as quickly as possible. Turns out, by waiting a bit, you get a little bit more information, and that can help you out quite a bit. So, for example, on this chart right here, you can see that the market, it moved down. Now, it fell below these lows, these recent lows right here, especially with this candle right here. Now, what I could have done, and I actually didn't take a trade here, but let's say that I did, what I could have done is I could have placed a sell stop below this big candle here, not really knowing where the market's going to go. And based on what we had here, I could put a sell stop right here. And if the market actually goes lower, it would trigger me into the trade. But if it just bounces and just reverses and goes higher, let's say I have my stop loss up here above the bearish candle here, then and the market goes to my stop loss price before it actually triggers my sell stop, then I don't get in the trade. So if you think about it, the very worst types of trades you will miss out if you use a sell stop for sell trades and a buy stop above highs for buy trades. You're basically waiting for the market to confirm that it wants to go where you think it's going to go. Now, the disadvantage of that is that, of course, I have a sell order here and a stop loss up here. So I have like 100 pips of risk. So if I want to get 3R or 3 times my risk, I'd have to wait for 300 pips move lower to actually cash out the trade. Now, I could wait for the market to retrace into that candle, and at least a couple of things could happen. One, it could retrace up into that candle and then stop me out. Without ever going to that sell stop price that I, had I used just a normal sell stop below the low of the candle. So that would be like kind of the worst case scenario. Another thing it could do is it could come up there, but not get quite to where my sell limit order is, and therefore I miss out on the trade altogether. Now, in that case, you could use an OTO order or OCO, sorry. OCO order, one cancels the other. OCO means if it goes up to here but doesn't get to my sell limit order, but then falls down here and it triggers my sell stop, then I would cancel my sell limit. All right. Now, the best case scenario is that it would retrace up a bit higher, trigger me here. I reduce my risk by, say, 30 pips or something like that. And then now, instead of having to wait for 100 pips, I only have to wait for whatever that is, 100 or 300 pips for my 3R target. I only have to wait for 60 times 3, which is whatever, 180, right? So that's another way to do it. Now, I'll show you a recent trade I took, and I'll show you why I still would do what I did, even though I just got stopped out on this trade the other day. So this is a sell. Oh, by the way, if you want to follow along with as we grow a small account from $1,000 up to 100,000, you can go to bigprofitscourse.com and learn all about this. It's at bigprofitscourse.com, or click the link below or above this video. I'll give you all the information about that, okay? So that's bigprofitscourse.com. Okay, so let me zoom in here and show you kind of what was going on here. So the market made this big bearish candle here, which engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9, I don't know, I think 10 candles to the left. And that's great. And I thought the market was going to go lower. My open position ratios, which I pay attention to if you've seen my other videos, were in good standing. And so it was a good idea to sell. But however, I thought, you know what? This candle is just way, way, way too big. I don't want to risk 180 pips. So basically I have to wait for about 600 pips for the market to go 600 pips lower before I get my 3R target. So instead, what I did is I pushed an order, a sell limit order. Instead of down there, I put it at 118.23. Actually, I think it was 25. Anyway, the point is, that saved me quite a bit, because if I would have used a sell stop down here, it would have been at 117.51 or something. So I'm able to actually shave off 75 pips of risk in terms of where the stop's placed. However, the disadvantage actually came, so I would have had about 110 pips of risk on this trade. So I'd have to go for about 330. But that's no good. And the reason why it was no good, of course, is because the market rocketed up, triggered my sell limit, of course, but then also stopped me out. And it was a loss. But here's the thing that's important, I think. When you use these so normally I would use a sell stop here and I'd wait for the market to make a new low, and I would have avoided a loser like this. In fact, in about 85-90% of my trades, that's what I do. But I didn't do it in this instance because the candle was just so big. And typically you will see big candles when the market makes a big candle. It often will retrace like that. So for example, here's another big candle here that engulfed this candle and this candle. And what did it do? It actually wicked up into that candle up there. Let's see if we can find another one. Here's a big one where it didn't retrace much at all. Here's one. Here's a good one. So here's a big candle here. So the market comes back. It pulls back. This is kind of a bounce with the trend trade. Would have been nice if it closed a little bit higher. But look what the wick did. The wick went all the way down here to, like, I don't know where that is. Of the 100 pips here, it went, it made a really nice retracement. It traced about 40% into the candle. So that's a pretty big, almost 50% into the candle. That's a pretty big deal. And then of course it kept going. And that's kind of what I'm hoping for when I get these really massive candles. Here's another one. I like to get in on a bit of a retracement back into the candle because they typically will retrace like that. If you go back like 10 years, 11 years, you'll see a lot of this going on the daily chart on the Euro Yen, Aussie Yen, Kiwi Yen. A lot of those charts had really massive, big daily belts, and they all retrace like that. So it's actually quite common on just about any time frame. So in this case, I'm not going to change what I did because this trade got stopped out. I would have done that when I first started trading. I did a lot of like, okay, that didn't work, I'll do this. And if you think about it, let's like a business. If your business is to sell breakfast food and then all of a sudden you have a bad week and you don't make much money or lose money because of staffing costs and all that, you're not going to all of a sudden decide that now you're going to just sell lunch and close for breakfast, right? I mean, that's crazy. And it's the same thing with trading. With trading, I understand if you live by the dirty, rotten sell limit, you die by the dirty, rotten sell limit, right? And if you use the standard sell stop, you're going to have wider stops. And I'm okay with that. And unless this sort of pattern shows up like 60 times where I start to say, wait a minute, my sell limits are not working anymore, taking these retracement moves just doesn't work anymore. If that were to show up over 50, 60, 70 trades, and I analyze those trades, I could say, well, maybe that's something I want to disregard now. But in most cases, it's only going to be a few here and there that make you, kind of upset and say, that sucks. But on to the next trade. I mean, I'm always going to do this when I see big fat candles. I'm always going to assume that I can get in on a little bit of a retracement and save myself because the retracements are just so common. I hope that this helps. If you'd like to join us at the Big Profits course, small account Big Profits course, you can go to bigprofitscourse.com. Otherwise, we'll see you in another video.